Every Canadian with a mortgage is waiting for the same thing: rate cuts, relief, the cavalry to come over the hill. I hate to say it, but it's not coming. The Bank of Canada just broke the playbook, and they proved that by not cutting at their last meeting. The pattern we've relied on for decades was weak economy, rates go down. Well, that might be dead. And if you're planning your mortgage around that old pattern and hoping rates are going to come down, well, you're planning around a lie. Here's what I'm going to show you. 1, the economic shift that broke the old rules. 2, the labor market data that should trigger rates to go down, but it won't. And 3, what this actually means for your mortgage payment with real numbers. And 4, a 5-step playbook to protect yourself. So let's get into this. For decades, the pattern was simple. The economy slows down, people lose jobs, Bank of Canada cuts rates, mortgages get cheaper, recovery begins. This pattern saved us through 2008, saved us in 2015, and saved us in 2020. Every time the economy got hit, rates came down and bailed out homeowners. Well, this pattern may be over. Here's why. Inflation used to be caused by too much demand, people spending too much money. The easy fix: raise interest rates, cool spending, inflation falls, then cut rates back down. But this inflation, well, it's not demand-based, it's supply. Geopolitics, war, oil and energy shocks, trade disputes, tariffs, food supply chain breakdowns, an aging workforce, and AI replacing jobs without lowering prices. None of these go away if the Bank of Canada cuts rates. You can't rate cut your way out of a war. You can't rate cut your way out of a supply chain issue. So what does this mean for you? It means the Bank of Canada is trapped, as mentioned in my last video. If they cut rates, inflation gets worse. If they hold rates, the economy weakens. And right now, their priority, well, I'm assuming it's inflation, which means rates are going to stay high even if the economy is falling apart around us. Let's talk about something that should actually terrify you a little bit, as much as I hate to do that. 84,000 jobs were lost last month. Unemployment's at 6.7%. Youth unemployment is over 14%, and full-time jobs are declining. In the old playbook, this is a 5-alarm fire. This is where the Bank of Canada steps in, cuts rates aggressively, and floods the economy with cheap money. But not this time, because inflation is still running hot from the supply side. So the Bank of Canada is sitting on its hands, watching the job market bleed, and doing nothing because there's nothing they can do. Now, here's the so what. You might lose your job and face higher mortgage payments all at the same time. That's not a recession. That's not a squeeze. That's a nightmare. And nobody's coming to bail you out with rate cuts. Let's make this real, because I keep hearing the same thing from clients. I'll just wait for rates to drop before I renew. Hope is not a mortgage strategy. Here's what's actually happening. Millions of Canadians are renewing their mortgages right now. I'm sure you've heard that endlessly on TikTok, Instagram, and YouTube. And they all locked in during low rates in 2020 and 2021. Here's what the math could look like on this. Your old rate, 1.9%. Your new rate, 5.2%. On a $500,000 mortgage, old payment, $2,100 a month. New payment, $2,950 a month. That's an $850 a month increase every single month. That's $10,200 per year. And here's what makes it worse. Layer on everything else that's going on. Groceries up, utilities up, insurance up, property taxes up. Stats Canada says roughly 1 in 3 Canadian households are already financially stretched. Add $850 a month to that, well, something generally ends up breaking. This is why I'm making this video. If you're renewing in the next 12 months and you're waiting for rates to come down, or even if you're looking to buy a house and you're waiting for rates to come down to make things more effective, the data says that probably won't happen. Not enough that it will be meaningful, and definitely not fast enough that you're going to be able to take advantage of it. All right, here's what you can actually do about this in 5 steps. Step 1, know your renewal date. Not roughly, exactly. If it's within 12 months, you are in the danger zone right now. Most lenders will let you lock in a rate 120 days or 90 days before your renewal. So use that window. It's important. Step 2, stress test your payments. Take your current mortgage balance. Run it at 5 or 5.5%. Can you handle those payments? If the answer is barely, well, then you and I need to have a chat, because you need a plan, not a prayer. And we may need to look at extending your amortization to make your payments more affordable. Step 3, think strategy, not just interest rates. Everyone shops for the lowest interest rates, but smart homeowners shop for the right structure. That might mean looking at extending your amortization to lower your payments. consolidating high-interest debt into your mortgage to free up cash flow, or accessing equity through a home equity line of credit in case you need it, or even switching lenders if your current bank won't compete or offer good enough rates and products. Renewal is the only time that you can make changes penalty-free. So if you're coming up for renewal, this is an opportunity. You need to take it. Step 4, don't default to what your bank's renewal letter says. The letter they send you, 21 days before renewal, it's designed to get you signing without shopping. It's almost never the best deal, and I would honestly call it a bit of a lazy tax. You're going to sign it and send it in. You've been their client for how long, and they're not even going to give you best rates right up front? Pardon me, but that's BS. So definitely shop around. Talk to a broker. I don't care if you talk to other banks, but do your due diligence. Look at what's available from all lenders, not just what's presented to you by one. And step 5, start now, not at renewal. And if you're looking to buy, shop aggressively, not when you're panicking. Now, the earlier you plan when it comes to this stuff, the more options you're going to have. Every month you wait, you lose leverage. So if you're thinking about buying a house, get in touch with a mortgage professional as soon as possible. Get the application in, figure out your numbers, see about getting a rate hold on a fixed rate if that's where you want to go. If you're up for renewal, talk to a mortgage professional, explore the different options, take a look at what's available and what works best for your unique situation. Yes, you're going to get a lower interest rate on a renewal, but if you renew, you can't refinance, meaning you can't extend your amortization, you can't make changes, you can't pull equity. So the lowest rate might not actually be the best thing for you at this point in time. Strategy is key, and you want to make sure you have someone that's shopping and making strategies for you based on your needs and not the profit margins of the bank. Here's the bottom line. The old rules, for now, they're gone. Weak economy doesn't mean that lower rates are on the way anymore. If your mortgage strategy depends on rate cuts to save you or make payments affordable for you to either purchase a home, renew your mortgage, or whatever you need to do, don't wait for rates because chances are they're not going to be going down anytime soon. Plan for higher borrowing costs, plan for higher interest rates, and have someone help you with that plan so that you can have the maximum amount of success with it. If you're looking to buy a house or your renewal is coming up and you want to build a real plan, not just hope for best rates, I'll link my booking page down below in the description. And if you missed my last video on why the Bank of Canada is completely trapped between, three forces being a rock, a hard place, and a larger rock, well, watch this video next where I go into it. It's the foundation of everything that we just talked about in this one. My name's Myles Nowik, owner of the Nowik Mortgage Team, powered by Indy Mortgage. And if you got value out of this video, please consider liking and subscribing so more people like you can see it. Thanks so much. We'll catch you on the next video.